Hello, YouTube. How are you? My name is Mike. This is Health and Wealth. Thank you so much for joining me today on another episode. Today, we're going to discuss the Group B distribution. So, they were announced earlier this morning. If you're not on the distro list for it, go to YieldMax's website and submit your email address. And you should get that email around 6:55 a.m. on the date of the declaration. So, today is that day. So I want to go over each of the distributions that they've announced. Now, the X distribution date, I know a lot of us call it X div date, is going to be tomorrow, which is January 3rd. That's a Friday for all of us that are still on holidays. My holidays sadly end today. So back to work tomorrow. The payment will be on Monday, which is January the 6th. And so that will be the payment. So in order for you to qualify for these distributions, you have to have your money into them by today at close. And then if you purchase tomorrow, you should see a slight dip depending on how much the distribution is and on how the market is doing. If the market's going down or going up, then that depends. That's how much money you're gonna see your shares depreciate in price or appreciate in price if we have a crazy day in the upswing. But rarely does that happen. Now, a lot of people, they say, like, can I buy on the ex dividend date? And no, you cannot. I mean, you could, but to qualify for these distributions, you have to have it in on the declaration day before the ex dividend day. So, a strategy that a lot of people employ is that they buy on the ex distribution day or ex div day, because they know history has told us that the share price should drop the amount of the distribution. So a lot of people like to buy on that date to get their shares cheaper than say a day like today, as an example. So let's go over all of the distributions that have been announced. Again, this is Group B, and so you can see the headline here. YieldMax ETFs announced distributions on PLTY. You ain't got no alibi. $3.58. Huge. MARO, $2.49. NVIDIA, 89 cents. Now, a lot of people on X aren't super happy with that one, but I think we all knew that it would be a little bit lower. We'll talk more about it coming up. YMAX, same thing, a little bit lower than usual, 18 cents. YMAG, 30 cents. So let's go through all of them right now systematically. So first one on the list, this is a weekly pair. The first two are weeklies. They pay out every single week, which is awesome. So it is going to be YMAX. This is 18 cents here. Now we'll notice that YieldMax has removed a column from here. People like to know the distribution rate, and YieldMax has taken that column off for some reason. I've noticed that lately the website is starting to deteriorate. It's not really showing us all of the information that we should know. I'm going to make another video about that disappointment coming up here. And like I said, today's my last day of vacation, so I'm going to make 3 videos today coming out at different times. So this one's all about the distributions. So we got YMAX, 18 cents. Take a look at YMAX on the internet, www.google.com. I've typed in YMAX ETF here, trading at $17.07. If you take a look at the last 5 days, because it does pay out every week, so it is down 4% in the last 5 days. Quite a bit here. Not great, but I mean, the entire market last week was kind of rocky, wasn't it? If we take a look at the last month, down 6.91%, and the last 6 months down 13%. So I mean, not super stable. $17 is all right. I'm going to YMAX here. It says its current distribution rate, which is just today's distribution rate, is 75% annually. And I mean, we're at 18 cents today, so 24, 13, 12, 23. So yeah, it's not the lowest it's been, but it is lower than last week. I mean, you can't be asking for 20. I mean, we can ask for 24 cents every single week, but probably not going to happen. What people love about YMAX is that it is a weekly pair. A lot of people mention that their hopes is that they can compound this quicker and faster, and build that brick by brick, push that snowman down the hill so they can retire. So that's why they've chosen YMAX. For me, I'm not in YMAX or YMAG, but Um, yeah, I mean, they're not bad. Not bad, that's for sure. Next one up is going to be YMAG. It's announced 31 cents, which is pretty high for YMAG. Let's take a look at it. Its past year, its current distribution rate, 47% annually. And now that changes every single day. But wow, what did I say? 31 cents. So that's going to be its biggest payment ever. Wow. Well, there we go. A couple down here in August, but biggest payment in a very long time. 31 cents. You got to be happy with that. That's for sure. YMAG here is more stable in share price than YMAX appears to have been, although, the last 5 days is down 5%. Last month down 2.1%. Last 6 months down 9%. So, maybe I take that back. Maybe it's not as stable, but it's really close, isn't it? So, I mean, I'm a big fan of NAV stability or share price stability. I like that. I want to get distributions while maintaining the price. If the price of the purchase I made keeps going down, I'm not a big fan of that personally. So I want my share price to stay fairly stable. Plus, I want to get a distribution. I need to find a way to make that happen. So that's going to be your YMAG. So next up is going to be probably the reason most of us are here, including myself, is NVIDIA. This is a NVIDIA play. NVIDIA has slowed down quite a bit after their recent earnings, and when NVIDIA share price slows down, that also means the options on NVIDIA slows down. And when the options slow down, then we don't get as high of a payment as we normally would. So NVIDIA here is going NVIDIA. NVIDIA is going to be paying us 89 cents on Monday, which is good, right? Now, if you didn't know, NVIDIA is going to be paying out 2 times in January. So we're going to be paid on the 6th and on January 31st, which is pretty cool. That's going to be, yeah, I love it. So all YieldMax funds, except for the weeklies, are going to be paying out 13 times in a calendar year. So this is NVIDIA's time to pay out 2 times in the month. So 89 cents is definitely going to be one of the lowest. Let's take a look at the past year: $1.81, $2, $9, $35. So yeah, definitely going to be the lowest 89 cents since January of last year. Now, that's, let's hope that's a sign, right? Let's hope that we do the same thing this year. I am thinking of making a slight change to how I invest in NVIDIA. I'm gonna, contemplate that today and create a video that I'm gonna send out to my members first, and then I'll reveal it to everybody else on Monday. That's the plan. Now, NVIDIA share price over the last, let's just go 6 months here, is down 18% in that time period. Now, NVIDIA itself, let's go 1 year, was up 7.91% in the last year, but we did have some high prices around the $31 range back in June and July. No, just June. And since then, it's kind of been, a roller coaster, down a little bit up, down a little bit up, and it's just kind of maintaining around this $23 price point. For me, my current average price, I think, is $27.90 cents. So it's hanging around as long as it sticks above $20. I'm okay with that. Paying out 89 cents, that's not too bad at all. Of course, everybody, we want it to be higher, right? But maybe this could be a good thing for our share price. Think about it that way. So NVIDIA itself today is up 2.68%, $137. It has some massive, you know, followings behind it. The people that put out their predictions are saying, around the $170 range, the 100 all the way up to $190 range. I saw I don't know if it's true. I didn't watch it, but some guy that's on CNBC sees it at $1,800. I'm gonna make a video on NVIDIA itself and put that out to the people, which is you. And I'm gonna go find that clip. It was with Jim Cramer, so take it with a grain of salt. But yeah, NVIDIA's future is definitely bright for sure. So again, 89 cents. That's the big one. Let's take a look at at dips. I like my dips with chips. This is the inverse fund. This is going the opposite direction. It's shorting NVIDIA, and it is paying out 50 cents this month, which is pretty high. If I take a look at dips in the past here, it's paid out 4. Okay, so it's a little bit lower than usual. 63, 61, 68, and $1.21. So it's been out for, let's just say, since what? I don't know. August. Let's say it's been out since August. Let's take a look to make sure I'm right about that. July 24th. And it started at $12.69. And so when you are shorting a stock like NVIDIA that just continually kind of rises slowly here, it's difficult to do. And with the predictions, barring any crashes or dips or anything, dips, pun intended, things like that. With the predictions of NVIDIA only going upwards, you know, it's going to be hard to maintain the price of this dips right here. That price should keep going down. I mean, if we have a major crash or NVIDIA all of a sudden forgets how to do business, then that price should go up. But difficult. I know we have some people watching this video that are in dips. For me, I am out on all of the negative funds that YieldMax has. Not one of them has been successful so far. You have, if you're looking to get income, you are getting your income, but the price of your initial investment is going down every single month. Let's take a look at PHEBEE now. So PHEBEE is the Facebook or the Meta play, paying out 44 cents this month. 44 cents. Okay, so 37 last month, 83, 92, 53, 79 cents. So, okay, 49 cents. PHEBEE itself, it's a pretty stable fund here. It doesn't really move around too much, just down 1% in the last 6 months. I would take that if I was a PHEBEE investor, which I'm not, but that's not bad. Meta itself here up. Let's do the comparison, right? Let's do the 1 month comparison. So down not even 0.5% in the last month. Meta itself up 5% in that same time. But you did receive your distributions, right? So you're in it for the income. A lot of people are buying PHEBEE for the income, not for the share price. And also, Meta itself might be outside of a lot of people's budget. $600 share price right now. If we look at Meta over the last 6 months here, it's up 17%. If we look at the last year, it's up 73%, which is insane. And then the same fund over here at YieldMax is down in that same period 9%, which is, I don't think that's good, right? If the underlying is skyrocketing, don't you think the ETF should also go up a little bit in that time? So here's part of the reason why it hasn't gone up. YieldMax plays options, right? And so when they do the options, they tend to go very close to the share price. And so let's just play pretend. Let's pretend Meta was at, I don't know, let's say it's $600, right? So what YieldMax would do is they would write an option that ends, this week or the end of next week. And they'd say, we want to make it 5% out. So 10% would be 60. They say, we want to make it $630, 5% out. Well, Meta, you can see the peaks and valleys here, has bumped itself up and down like crazy. A lot of times it just blows past that option, and then YieldMax will have to pay to close that option. Now, what YieldMax has started to do is these cash, oh my goodness, I almost said cash secure puts, these call credit spreads. And what they do with the call credit spreads is they put it so far out of reach that they don't really even get triggered. And so, therefore, the share price of the underlying goes way up, and the share price of the YieldMax fund goes down in that same period of time. So not the best strategy ever. YieldMax, right? Yield pretty good is a good strategy. I would say you're probably going to make more money if you write options and you kind of put it, 15, 20% out and just bring in some yield. Whereas if we put it 5% out, it's going to get blown through, and then you go ahead and you have to pay money to close that, thus bringing down the share price. So not too good. This is one of those that it would have made sense to invest in the underlying itself at the a year ago. Next up, let's talk about GDXY. GDXY paying out 34 cents. This is a gold play. I love gold, 34 cents. You know, this is its eighth payment here. Math, 1, 2, 3, 4, 5, 6, seventh payment. Right around what it normally does here, but GDXY itself has not performed very well. It's $14.70. If we take a look at the last year, it started at 20 in May, and it's just gone down 25% in that time. But you are getting your distributions every single month. I should go look at the price of gold. Has gold gone down 25%? I doubt it. So again, maybe we're paying too much. Maybe we are not getting a lot of yield out of GDXY, which is probably the case. And, you know, I wouldn't be happy with losing 25% of my initial capital that I put in just to go ahead and get, you know, these distributions right here. Personally, I wouldn't be too happy about that. Next, let's talk about BABO. So 44 cents, Alibaba. 44 cents. This is its fifth payment. It is its official lowest payment so far. BABO ETF itself kind of hanging around the $20 mark here, but it is down. I mean, it had a good peak, you know, in October, all the way up to $25, and it started in August. Is that true? Let me make sure I'm right about that. Yep, August 8th. So, I mean, since August 8th, it's down 15%. But I mean, you have received some pretty lucrative distributions here in that same time period. I'm not going to do the math right now, but I'll do it in the edit here. And I'll tell you what percentage of distribution you got in that time. Next up, JPMO, very steady, paying out current distribution rate of 22%. JPMO paying out 30 cents this month. And if I remember correctly, yes, that's very close to what they pay out every single month. So at least you know what you're going to get with JPMO. You know, the last 3 months have been in that 30-cent mark. You know, 4 out of the last 5 months have been in that 30-cent mark area. So at least you know what you're getting with it. JPMO ETF itself is also very stable. If we look at JP Morgan stock, it's probably up a little bit in that period of time. But if we look at the last 6 months, down 8%. In a bull market, that's tough, right? Whenever you lose 8% of your initial investment, if you invest in the last 6 months, but I mean, you are getting your distribution. So I guess we can't complain too hard about that. For me, 22%. I would rather do it myself than pay YieldMax 1% or 0.99%. Because I mean, 22%. For me, I'm Canadian. I live in Canada. And I have to pay a 15% tax rate on all income coming in from US distributions or dividends. So I would have to pay 15% on that 30 cents that I got, right? And so for me, it just doesn't make economical sense to do it, that's for sure. But JPMO, there you go. Next up is the largest loser of all of them, MRNY. You ain't got an alibi, paying up 55% current distribution rate annually, but let me look at it again here. 25 cents, you know, hovering around the same, right? 22, 40, 37, 47, 46 cents in the months prior. But I mean, MRNY itself, MRNY, is now at $5.32. It's a fund that personally I would never invest in. And it's not just because it's at $5, but also Moderna is also down quite a bit in the last 6 months. So this is kind of a trend where it is following Moderna, right? And so we saw with PHEBEE, Meta went way up, and PHEBEE kind of stayed the same, went down a little bit. But with this one, MRNY and Moderna are both going down, right? So yeah, we'll see. We'll see. If you look at the last 6 months, down 65%. If you look at the last year, down 78%. So next up, we do have a winner. We have PLTY. And this is paying out $3.58. So people have got to be happy. This one's been paying out for a few months now. I did do a little bit of coverage on it. When it first came out, PLTY is a Palantir play. 61% current distribution rate. This is its third payment, second payment in the $3 range, which people have to be happy with. It came out, this is the first fund that came out at $50. just a few months ago. There it is right there, October 8th, $51, started at 50. It went up right away. Had a dip. Now, this is like timing the market. We got really lucky if you're a PLTY holder because Palantir itself also went up October 8th here. It was at $38. Since then it's basically doubled itself to $75. Let me zoom that down a little bit for you so you can see that for yourself. So Palantir's done very, very well. And because that PLTY has done very, very well in that same time period, can Palantir keep going? I mean, they just signed a new contract today. They are an AI company looking to become, the next big thing on the market. Who knows if they can continue that trend? But I mean, let's take a look here. I don't know if this is going to tell us about that signing of that new contract today, but no, it's not. I don't think it is. But I saw somewhere that they signed a new huge contract today, so that should bode well for Palantir going forward there. So PLTY, I know we got some PLTY people in the house. Congratulations to you so far. What are you doing with your distributions? Are you reinvesting them in? Are you taking them, putting them into a safer stock, a blue chip stock? Are you, retiring off that $3.58? What are you doing? Tell us in the comments. All right. Last one is the newest one. It's MARO. So MARO is a Bitcoin play off a underlying stock called MARA, and MARA mines Bitcoin. They've been around for a few years now. MARA is very steady when it comes to options, and it has been steady when it comes to options. I've been following MARA for probably 3 years now. And they are, out of the Bitcoin miners, one of the more consistent Bitcoin mining companies out there. I'm not promoting it at all. In fact, none of this is financial promotion at all. But yeah, Mara's done really well. If you take a look at Mara's share price is $17.49. If you look at the 1 year on Mara, it has had some massive spikes when Bitcoin goes up. So you can kind of see those spikes right there. It is a true Bitcoin play. MARO itself was difficult to find on the old Google machine here. So I found it on CNBC's website. MARO came out at $50. It kind of immediately went up a little bit, then it went down, and it's all the way down to $39. Now, this came out less than a month ago, and the share price is down, from 50 to 39, so down 11 bucks in that time. But I mean, it is a Bitcoin play, so as Bitcoin goes up, so should these. If Bitcoin goes down, so should these. But let's take a look at the distribution. It's first month $2.49. Doesn't have a current distribution rate, but $2.49 will be its first payment here. Curious, yeah, it's just a smaller, very small fund right now, $5.68 million in net assets currently. It should grow. Personally, I'm not super pleased. I wouldn't be pleased with the share price if I bought in on day one. But I mean, that distribution is massive. And we know what happens with massive distributions on a failing ETF. I mean, it's not failing. It's been out for, less than a month so far. But share price is down. Are YieldMax folks paying too much money? Did they really make that much? Did they make that much, and are they taking it out of your share price to pay you, right? So, if the share price is down $11 in a month, don't you think maybe they should have paid you a buck and kept another dollar to kind of pump that price of the share price up? That's just how I feel about that. So that's your distribution announcements. Now, yeah, I'm a NVIDIA holder. I've been with NVIDIA since end of March of this past year. So it's been, what's that, 10 months, 9 months, something like that. I've been happy with NVIDIA. I'm okay with 89 cents. I know that I'm going to get another payment this month from NVIDIA, which is going to be kind of an anomaly. It doesn't happen very often. So, I mean, if it pays me another 89 cents 4 weeks from now, depending on how they do with their options here, then I'm going to be happy with that, right? That's going to be $1.80 in the month. I can take that all day long. I think I may want to make a slight change to how I invest a little bit with the YieldMax here, because there has been some interesting maneuvers by them. And I want to discuss that in my next video in more detail. But one of the things I liked about YieldMax was transparency. And lately on the website, I haven't seen the transparency come through. For example, NVIDIA. NVIDIA, I watched the Retire on Dividend videos where he talks about all the plays that the fund managers have done at NVIDIA. They've, their weekly calls. They're not showing up on the website anymore. And so for your average investor, you have to go digging into that, or you just fully blindly trust those at YieldMax to do what you want them to do. And if they're not being transparent and sharing it on their website in plain view for all of us to see, I personally don't like that. It's a pretty easy thing to do. That's one reason I'm thinking of making a small change to how I invest. And I'm going to go over the other reasons with you in future videos coming up here. But congratulations to all of us that are invested in these funds right now. Remember, we're going to get paid on Monday, January the 6th. I'm going to leave it there. I want to just thank the members that have tuned into my accounts or my channel here and helped support it. I really appreciate you. I also appreciate everybody else that likes and comments these videos and hits that subscribe. I do have a goal of 5,000 subscribers 12 months from now. So if you can help me out with that, I would love it. Like, comment, share, all of those things. My name is Mike. This channel right here is Health and Wealth. I hope you have a wonderful day, and bye for now.